Hello, everyone. Thank you so much for joining us on today's live session. We are live on Instagram as well as on YouTube. Thank you for joining us on today's session. I know you all saw the flyer. Yes, we are here live, and I do have a special guest with me in the house today. Our other guests will not be able to join us due to some unforeseen emergencies that we could not avoid. So we do apologize for that. You know how these things happen, life happening. But we're still gonna go on today's live. So please go ahead and share, invite. We have a very exciting topic today to discuss, and I do have a tax expert in the house joining me on today's conversation, today's roundtable talk. Again, welcome. If it's your first time joining us on this platform, you could please say a hello, a hi, a shout out, some hearts. Appreciate us as we appreciate you as well. So thank you all. Let's keep sharing. Let's keep inviting. Let's keep sending out the reminders. We are live on Instagram as well as YouTube on Coach Lola Owokoniran YouTube channel as well as Instagram. And this is our Build, Grow, Thrive Roundtable Talk. Roundtable Talk, where we tackle real money conversations, wealth conversations, legacy conversations to help you, empower you as well, to empower you to build wealth, to leave a legacy, and to live a life full of purpose, a purposeful life. That's the essence of our conversations each time we go live, to bring you information, to give you transformational topics and conversations and substance to help you along your life journey, money journey, you know, and all of that. So today we're talking about something that touches every one of us, especially here in the US: taxes, taxes. Did you know that nearly 40% of Americans do not feel confident about understanding their taxes? And over 50% worry. They worry so much that they are paying more than they should. Is that you? You might want to stay tuned. And that's exactly why you and I want to stick around for this session. We have experts in the house. I do have a special guest, like I said earlier, in the room with me today, who will break this down for everyone: business owners, W 2 employees, retirees. Everyone is welcome. Hello, Reese. We see you. Thank you so much. Thank you so much. Please keep sharing. Keep sharing. Let's rack up the viewership to make sure that this video gets to everyone and anyone who needs to hear this information to help them prepare for 2026. In a couple of days, we are gonna wrap up the year 2025. So you really can't make any changes to your 2025's data. But for 2026, going into 2026, you need to prepare. So stay with us to the end, because this session will save you lots of money and could definitely help you on your money journey, your wealth journey towards financial freedom. Now, before we get started, please go ahead and give this video a thumbs up. Yes, that's one way of showing your love. Hit the subscribe button and please share. If it's worth hearing, it's definitely worth sharing, like my spiritual mother always says, Pastor Mary Ofosuapia. So please share this video so we can prepare our community, we can prepare our families, our co-workers to take control of their finances. So, and drop your questions. Yes. So it's not going to be a one-way conversation. We want to address your questions. If you saw the post I did earlier today, please bring in your questions. I have a guest in the house who is going to help you address your questions. We'll answer as many as we can on the live. I'll also include his contact information in the description section of this video. And yes, you are always available to book a session with him, to get in touch with him. And yes, We'll also talk about how you can get a free wealth discovery call with Coach Lola here today to help you start your personalized financial plan as well. For those who are new here, welcome to you as well. If you're seeing my beautiful face for the first time, thank you, thank you, thank you so much. Our channel, Coach Lola Owokoniran, is all about helping you to build wealth, leave a legacy, and live with purpose. We share practical strategies, faith-based guidance as well, and real life tips, all on money, wealth, and purpose. Faith-based ones, and you can take actions on them immediately. That's the essence. We give you the information, and we do want you to begin taking the necessary steps towards your financial goals, towards your life goals. I'm Coach Lola Owokoniran. I am a wealth empowerment coach. I'm a speaker, an author, and your partner in building wealth that lasts. I call myself your financial cheerleader, if I may. So I'm here to support you, to hold your hand through it all. My mission is to help families, individuals, entrepreneurs, students as well, plan to grow and protect your money. And tonight we have a powerful financial mind with us in the room. Again, let's keep sharing, let's keep inviting, let's keep sending out a text message. Hit the like button as well. I'm just trying to stay engaged so we can give people a few more minutes to join the live session. We are here live on Instagram as well as YouTube. Your questions, please type them in the comments as we get started. If you're thinking about one right now, go ahead, type it out. Send in your questions. Send in your questions. Now, without any further ado, I'm thrilled to introduce my guest today in the room with me on Build, Grow, Thrive Roundtable Talk is Mr. Ernest Asare Nkansa. He's an accounting professor and the CEO and founder of Shining Star Tax and Accounting LLC, who brings years, not just a decade, but years of experience doing this, guiding entrepreneurs and everyday workers to make smart tax choices. To make smart tax choices. He has been living this dream and he has been able to successfully help many families, many business owners across the nation, globally, both internationally and locally as well. So, and out of state as well. So he's not just, within a local advisor when it comes to your taxes. So, without any further ado, please help me welcome Mr. Ernest on today's roundtable talk. Thank you, sir, for joining us. Would you like to say anything to our viewers today?
Hello, everyone. I hope you're all doing very well. Uh, I'm excited to be here to share what I know and maybe answer your questions. Because when it comes to taxes, I must tell you, there's nothing like a one size fits all.
Mm.
Everyone's situation is very unique. So I may provide a general idea, then maybe your specific questions, we can address them. If we can do it here, we can do it here. If you have to schedule a time to talk, we can do that. So, I mean, when the time comes, I'll just open up and give you some highlights, then we'll pick it from there. So, I'm glad to be here. Thank you all for joining.
Thank you, Mr. Ernest. Thank you so much. Thank you. Tonight we're talking about 2026 tax. Giving a brief overview, going deep. Um, the new changes, people are confused, people are concerned about common mistakes that might lead to paying more than they should. Or we'll also talk about practical ways that you can also reduce your taxes, whether you're a W-2 employee or a business owner or a retiree. And if you're watching us live, please type in the comments if you are either of this. Are you a W-2 employee? Are you a business owner? Or are you a retiree? Please type it out there. Or if you're an aspiring business owner, please go ahead and also claim that. Yes, business owner, retiree, W-2 employee, type it in the chat. if you fall under any of these categories, we'd love to get a good size of our audience tonight. So, Mr. Ernest, can you please explain to my viewers what exactly is the tax process? What does it look like?
Okay, thank you very much. Uh, Let me see where to start from. Let me get it this way.
Okay.
We live in a country where everything is system based.
Yeah.
They have a system in place to take care of everything. Even the ones to help you, it's a system in place. Now, taxes has its own system. And the idea is that if you make an income, you have to pay tax. And the tax law is so wide that no one person knows it all. But then there are avenues for you to research for what comes to you for the first time. But generally, if you make an income, you pay tax. There are some tax provisions that also helps you to reduce your taxable income. And when it comes to those, I want to stress that they usually call it qualified deductions. It means that it's not automatic for everyone. Okay, we all have dependents. You get what we call dependent credit. You get our earned income credit. All these credits are there, but you have to meet some requirements to take them. So generally, the whole tax system is very simple. At the end of the year, when you put your information into the system, now there are 4 filing statutes. There are 5, but the 5th one we don't really do much about it. But the 4 main ones determines how your tax liability will go. Okay, you can file tax as a single person. Now, a single person means that you are the only one on your taxes, no dependent, nothing. That's a single person. Or a single person with a dependent will now become head of household. Then you also have the filing, married filing jointly and married filing separately. And I want to clarify this because sometimes the fact that I didn't file together with my spouse, it means I filed separately. Now, there's people file single and they think they are separate, which is true. But on the tax form, we have to understand if you are married, you file married jointly. But you can also file married filing separately. It doesn't make you a single person for tax purposes. So if that is your case, make sure that when you go to your tax preparer, you explain to them before you think because he's the only one on the tax, then that's all, they are single. No, you have to find out. Because the idea is that if one of the couple files married filing separately, automatically the other spouse will file that. So if they file something different, IRS will write to them later. So that portion, let's get it right. If that is your situation, make it clear to your tax preparer so that we know that, okay, you are married, you are not filing together, but you are married filing separately. Then, of course, so your filing status determine what we call the standard deduction. The income you make, the government allows you to deduct a certain amount before you pay tax on the difference. And that amount is the standard deduction. You have the option to choose that standard deduction or itemized deduction. Okay, we have some expenses that qualify for the itemized deduction. So whichever of these two is bigger or larger is the one that will go to your advantage because it is going to reduce your income. So for example, if you made a 50,000 and the coming year for 2025 taxes that we are filing in January, if you're a single person, you can deduct 15,750 before you pay tax on the 34,250 if you're a single person. If you are married filing jointly, you can deduct 31,500. So, two people or two tax filers with the same income, their filing status changes their taxable income drastically. Okay. Then, or you can choose the itemized deduction. The itemized deductions are the things that you can take credit for, like your mortgage interest, your property tax, and your charitable contribution. Okay. Now, I think since 2020, in fact, since the first term of President Trump, he changed a whole lot of things so that the itemized deduction even became something not really beneficial because the standard deduction was doubled. But regardless, some people are still taking advantage of it because some people have a lot of mortgage interest and they do a lot of charitable contributions. So that can help you. So with your base income, you have the option to reduce it either with, and here I'm talking about W-2 income, okay? For W-2 income, honestly, you can't deduct anything apart from your standard deduction. And that's where sometimes people come and it's like, we used to have, some years back, we used to have what we call the unreimbursed employer deductions. When you go to work and you have to use your car, whatever, but you can deduct them. But all those have been changed. I know some tax softwares, like some tax softwares will still allow you to do it, but if you're not careful, IRS will come back to you. So now you choose between your standard deduction or your itemized deduction to bring your income down. It's the same thing for the business owner. Now, here I'm talking about the LLCs, okay, because corporations file taxes separately. If your business is a corporation, the business files its own tax. That has nothing to do with your personal tax. But if your business is an LLC, then every profit or loss is added to your W-2 income or is added on your personal taxes, which is the Form 1040. Okay, so sometimes people have business and they are not able to classify it well for taxes. Then you file one tax and IRS will write to you, you haven't filed it. So understand that if your business is a corporation, sometimes an LLC will opt to be taxed as an S corp. That makes it a corporation. So you file the business taxes separately, which will give you what we call the Schedule K, that you use it to come and add it to your personal taxes. So if you have a business, make sure you know exactly when you go to your tax preparer, let them know the type of business you have. And for those who have corporation, the deadline for corporation is a month earlier. It's March 15th. Okay, and if you have a corporation and you miss the deadline, the penalties are crazy. I think it's almost about $200 a month. And IRS, you don't want to owe them even $50 because the compounding interest, will drive that way. So W-2 income, self-employed income, you have the option to deduct with all these standard deduction, and that will bring you to your taxable income. Please, so far as you have a taxable income, you pay tax. I've had an opportunity that clients come to me and their first thing is that, Ernest, I don't want to pay tax. I'm not the one to determine whether you pay tax or not. Your situation, your income, your family size will determine it. My goal, however, is to look at your situation, look at the taxes provisions that can help you to reduce it. And most times, yes, it can reduce it to like zero taxable income. Then in that case, you don't pay tax. But at the end of the day, your situation determines the taxes you are supposed to pay, and it is compared to what was withheld from your payroll. So because you have two dependents, because you are filing head of household, at the end of the day, your taxable income is zero, which means you don't have to pay taxes. So number one, all the taxes you paid is coming back to you. Number two, if you have dependents and they qualify, they have, because there's what we call the child tax credit, which is $2,000, okay, for any child below 17. And the tax law is so funny. It says below 17. So if by December 31st, your child is 2 days older, they don't qualify. It will move from 2,000 to 500. Okay. Then your income will once again also give you what we call the earned income credit. So the earned income credit, there's a threshold depending on your filing status. So for people who make a lot of income, number one, you don't get the earned income credit at all. So what you make determines how much you're supposed to pay, and that also is compared to what you paid. And any difference you overpaid will be your refund. If it happens to be the opposite, that means you owe. However, if you can take advantage of the earned income credit if you qualified, you can take the child tax credit if you qualify, and that can either pay it off or give you more refund. So that is the whole concept about taxes. So the whole thing is that so far as you have a taxable income, you pay taxes. And that amount based on your filing status will determine your tax bracket. Sometimes, I think the lowest tax bracket is 10%. Then it goes to 12%. Then it shoots to 24%. Sorry, 22%. Then 24%, 32%. And sometimes it's so funny that because you got maybe a $5,000, $6,000 raise, it moves you from your 12% straight to 22%. So I tell people, not until you file your taxes, don't project too much, unless you have actually worked the numbers and you understand. And refund, I always tell my client, refund is not automatic. You work on it. From day one, you have to be checking your pay stub to see if enough taxes are being taken. Sometimes the fact that we didn't go home with our gross, we assume that we are paying taxes. For people in the lower income brackets, because they are paid weekly, the income is not that much. By law, even the employer, even if you opt, they cannot take your W4. They cannot take a certain amount. So even though you see that your paycheck is less, if you don't pay attention to see that, all the deductions are coming like just towards my, Social Security and Medicaid, then at the end of the year, when you are told you didn't pay tax, you go and fight your employer. I've witnessed such situations, okay? I had a client come to me and it's like, you didn't pay taxes. And was mad because if I make $200, I go home with less than $200. So what do you mean by I'm not paying taxes? So we have to sit down, show them to know that, look, any income that you make, 4 mandatory taxes come out: federal income tax, state income tax, Social Security, and Medicaid. Social Security and Medicaid are things that will come back to you at the end. Okay? But then sometimes, even though your income is that little, that they don't take federal income tax, they still take Social Security and Medicaid. So there will be always some deductions from your paycheck. Spend time to track it. That are they taking any taxes? At least they should take 10% of your gross for federal income tax at the minimum. And that is dependent on how you fill your W4. I know some people will just go and fill exempt. I don't know if they understand the word exempt. Exempt means that don't take taxes now. Okay? So at the end of the year, then the government says that, okay, this is how much you made. This is the tax you're supposed to pay. By that time, you opted for exempt. So no taxes were taken. And that's where most of you will end up paying back to the government, especially the W2 income. Because for W2, there's little you can do to bring your income down. Unless you have some business that made a loss. And but the question is, did you set up a business to be making losses all the time? Okay. And we all know that businesses don't do well in the early lives. But if every year your business is making a loss, IRS will write to you that this is a hobby. Okay. That's the only way that will help you. So if you're W2 and you end up owing, then like Coach Lola said, for 2025, I don't think we can change anything. But getting to 2026, know how to fill your W4. Okay? Know how to fill your W4. I'm the type that I'm very conservative. I do zero. I claim single. I'm married. I file taxes jointly, but on my W4, I claim zero so that they can take the maximum. Now, sometimes you may think they are taking too much, but the difference between single person and married on the W4 might not be even an amount that you can really, really see to set it aside. $50, $60 per paycheck might not mean anything to you. But then when it's put together at the end of the year, that you have to pay back, and that is where the problem comes in. So when it comes to taxes, you have to plan. Look at your pay stub, make sure you understand how the deductions are going to give you a heads up as to what is going to happen at the end of the year. So if you are owing and you don't understand why you have to owe every year, maybe when you bring your specific question, I'll be able to explain it to you. But generally, when it comes to taxes, if you make an income, you have some taxes to pay. If you are fortunate and you qualify for some credit, that will help you to wipe that and even give you some refund back. So I think I will, pause here and open the floor for questions. That, like I said, everyone's situation is specific. Unique. So I don't want to give like a blanket, rule for everybody. So if you are here and you have any specific question, I'm going to open it up. I want this discussion to be to answer your specific question,
Yep.
not to lecture you about this tax law that nobody can even learn everything. Okay, so I'm here, and if there's any question when you send to Coach Lola, maybe she'll ask me, then we'll pick it from there. Thank you so much.
Thank you so much, Mr. Ernest. Thank you. Thank you so much. To our viewers, like Mr. Ernest said, if you have any questions, please don't be shy. This is an open forum. Post it in the chat and we will address your questions. We're taking time out to help us, help one another, making sure that we're not making mistakes going into the new year. Starting the new year right with our numbers, have a game plan. Have a game plan about your numbers. Don't wait till tax season before you engage with your tax accountants to plan for 2026. There are tax moves, money moves you can make. Which brings me to my next a question I have while we're waiting for our audience to send in their questions. But I do have a question from what you said. So would you say it's advisable for a W-2 employee to start a business?
I mean, we go into business
Mm-hmm.
to make profit.
Yes.
Okay.
Mm-hmm.
Where I stand is that if I have the opportunity to make the money,
Mm-hmm.
I won't let taxes stop me. The maximum tax I have seen so far is about 32%, which
Yep.
means that if I have opportunity to make $1 million, I'll go and make $1 million and pay 320 and go home with 600,000. Okay. So the one I said was because at the early life of some businesses, because we are now moving from the formative stage to maturity and all that, we are not able to make any money. That time, because your business didn't do well, if you have a W-2 income, it will help you. Okay. But I don't want you to think, oh, okay, because I have a business with my W-2 is always going to help me. Okay. Then it means your business is always going to make a loss. And truly, if it's a genuine loss, there's nothing wrong with that. Even if IRS will write to you, you can prove it. I made $100,000. I got myself into some business. Unfortunately, there was a big loss of about 40,000. Remember, that negative 40 brings my W-200 to 60 before my deduction. So that saves me a lot.
Yep.
But is my business set up to make losses every year? And that will be up to you. Okay. It happened, like I said, when it happens, why not? We take advantage of that. If I have a business, I buy a car, I write it off big. Those things are there. Yep. And sometimes some of the questions will be very so technical, not that it is illegal. I don't like when people make noise on the internet. Okay? Because then you open yourself to other things. It doesn't mean you are doing something wrong. If you are my client, I will tell you that, look, this is what it is. This is what we can do legally. Because there's a whole lot of things that you may qualify. And please, it doesn't mean everybody qualifies for everything.
Yes.
Okay? If you don't have a dependent, remember you don't have a child tax credit. If your dependent is over 17 years, remember you don't have the 2,000, it's going to reduce. So everyone's situation, the whole thing is that spend a little time to understand, especially in your case, you have a tax returns in front of you, then we can identify that, okay, this is what your situation is. This is what we can do to help you. For my clients with, in the higher income brackets, I tell them they have dependents, they are married, but on the W-4, they claim they check single and they claim zero. And they even do additional deductions. The reason is that if you claim zero, they will take the maximum tax. But most of the time, it's up to 10%. But your income at the end of the year might put you into the 32%. So even though they took that from you, you still end up owing. And I have clients, in that income level, compare they took taxes from me, but I'm still owing because they take the 10%. But at the end of the day, your taxable income your adjusted gross income will put you into the higher tax bracket. And like I always say, that additional income you make them take is something that you cannot even set it aside. I know finance people think differently. finance people think, give me my $20 today, I'm going to invest it. You know, yeah. And sometimes I won't let IRS have
Mm-hmm.
my money for free.
Mm-hmm.
If it's true, if you can take that $20 and put it aside and invest, you can do that. But
Mm-hmm.
sometimes even before the paycheck hits. So I'm the type, once again, I will go all out and let them take what they're supposed to take. At
Mm-hmm.
the end of the day, even if I'm not going to get a refund, I don't want to pay IRS.
Yep.
Okay, so when I say I don't want to pay IRS, it doesn't mean I don't want to pay taxes. It means I'm planning so that, because if at the end of the day I have to pay 5,000, and even if I have the 5,000 sitting down, lifting it to go and give to Uncle Sam, it hurts. So I'll
Yeah.
prefer they will take it $50, $100, $50, so I don't feel it. Okay, go make the money and pay the required taxes, but
Yep.
will help you to reduce that taxable income. So having a business, don't go and have a business just because you want to reduce your W2 income or losses every year. IRS will tell you it's a hobby.
Thank you so much, Mr. Ernest. Well said. Well said. I as a money coach or wealth coach, people do bring up that point of, oh, don't worry, I'll save that money. I want all my money up front. But from what I've seen, many people do not go save. They don't go invest that money.
Now,
And
the
then
truth of the matter is that,
they never do it.
you see, I sit in a situation where I realize that people really want to save,
They do.
but they cannot.
Mm.
Okay, yeah, because you know the bills. There's nothing free in America,
And
and especially those with kids, like these holidays.
mm,
By the time the season passes,
mm,
you've overcharged your credit card.
mm.
So not that people don't want to. Sometimes I'm kind of, I know you know me about that.
Yes,
Yeah, I'm
yes.
kind of, no reasonable person will say I will never save. No. Okay,
I
I
beg
mean,
to
they tell us
differ.
that today.
I, I beg to differ. It's one of the habits that a lot of people are not used to saving. That's
And that
it's
one is dangerous if you're not used to savings.
yes,
It's dangerous because one thing I know about savings too is that if you sacrifice and start,
yes,
you will love to do it.
yes,
So sometimes you have to look at the situation and say, you know what,
yes.
yeah, let me sacrifice something,
Mhm.
because
Yeah.
this is my philosophy. Nothing good comes cheap,
Thank you.
and cheap things are very expensive.
Yes.
Okay.
So yes, not what I've seen in my line of work being a coach is that it's many people are not used to the habit of saving. So they don't have saving because it's not second nature. It's not part of them. So even when we get our tax return, many of us we've already spent it. It's gone. But whereas I coach my clients, we come up with a strategy. We get you from, if your goal is 1,000, which I always recommend for everybody, at least have 1,000. And why are you saving? You're really saving for emergencies. Emergencies. That emergency can be a flight ticket. It could be a flat tire. To your point, the credit cards. Because when we don't have the savings, then we rack up the credit cards. So to your point again, something has to give. You have to sacrifice something. And once you start with, $5, $10, $50, gradually it gets you to your goal. But thank you so much. We have a question here from Karine. Thank you so much for asking this question. Excellent. I am single, but I end up paying state every year. This I have also said. I normally only claim 1 or 0. What can I do to get that to 0? She doesn't want to owe, is what she's saying.
Okay. Now, say she claims 1 or 0.
Mm-hmm.
The question is, does she have a dependent that she puts on the taxes?
Mm.
Because what you claim on your W4 is what you have to claim on your taxes. Unfortunately, you cannot claim yourself,
I know.
which means that if you are single and you are not going to have any dependent, then automatically it's 0. So the moment you claim 1, you are reducing the taxes. They are taking less than you are supposed to pay.
Mm-hmm.
Okay. If you are single and you don't have a dependent,
Mm-hmm.
you are 0.
Yep.
Okay. But if you are single and you claim 1, it means even what the tax they're supposed to take, they're going to take less.
Mm-hmm.
Because if you choose 0, you pay more taxes than if you choose 1.
Mm-hmm.
Now, when it comes to states, what happens is that the standard deduction for federal is bigger than the state. Okay, so whereas the federal, like in Georgia, the federal is allowing to deduct about, that was 2024, 14,900. The state is allowing to deduct only 6,000. So you end up having a higher taxable income at the state level than at the federal level. Yes, the state tax rate is also lower. Okay, so if you are paying 10% at the federal, you may end up paying 5% at the state level. But your standard, your taxable income at the state level can be higher. And like you said, if you are claiming 1, but you file your taxes and you are 0, you've even taken their money first. That's what it means. So if you are single, the only option you have is 0.
Yeah.
And if you are single and your income is higher, you are better off going to item 4, number 4C, as in Charlie, where you ask them to also take additional dollar amount. So that instead of waiting to pay $2,000 at the end of the year, you can let them take $25 per paycheck, and that will help you. See, the truth of the matter is that nobody will cheat you. Your income determines the taxes you're supposed to pay. So it's either you overpaid and get it back, or you underpaid and you paid back. Okay, but then with that income, whatever else you qualify to reduce it, that's why we come in to tell you that, oh, you can take this credit, you can take this credit to bring that taxable income down. Okay, so if you are single and you are owing at the state level, one of the reasons is because maybe you claim 1, and also the standard deduction at the state level is lower than the federal level. So whereas your taxable income at the federal level may be 50,000, your standard income, your taxable income at the state level will be more than 50,000. I hope I answered the question.
Well said. Well said. Please reach out to Mr. Ernest. His information is on the screen at the bottom, lower level. Reach out to him, book your appointment, let him know that you were live with us or you watched the replay afterwards. Let him know that you got his information from this platform, and he'll work with you. He'll work with you, get you the desired result that you need to get to. Explain, advise. He's very patient. He'll go in details. He's very humble about it, but he's very well informed, and he practices what he preaches. He practices it himself as a family, as a business owner as well. So thank you so much, Mr. Ernest. To our viewers out there, again, any questions, please post it, and book your appointment. Reach out to Mr. Ernest. Don't wait till tax season to prepare. Book a consultation, call him, reach out, explain your situation so you can plan for 2026. Reach out to your payroll department and make those changes on your W-4 forms, and as he recommends, you make those adjustments. Mr. Jimmy here, I think he's trying to make a joke here. Can he adopt? I guess, can Karine adopt a child? Are you willing to volunteer yourself to adopt?
I mean, if you have an adopted child, legally, yes, that's your child. You can claim them on your taxes. But that's something for the lawyers to help you get through that. But if you have, and one of the things I want to stress, I know people don't want to hear this, but the tax law, when it comes to laws and rules, sometimes everything is okay until something happens. Yes. Okay. By law, even your own child, if they don't live with you for more than 6 months, you can't claim them as dependents. Even your own child. Okay. The only thing is that IRS, they don't have time for all this. The only time they will come after is when 2 people want to claim the same child. That's the only time IRS. But maybe something happened, then they have to, then now they know that, oh, then you don't even qualify. And I have somebody who reached out to me recently. They are denying the child tax credit. They are denying the additional tax credit, the earned income credit. And this person got a refund. So now the refund you got that you didn't qualify, you are bringing it and all that, a whole lot of Okay. So one of the things is, I'm not saying don't do it, but just understand, you know. So if you have a child that you claim on your taxes, find a way to have some mailing address with the child's name on it,
Yep.
because it's one of the things you can use to prove that they live with you.
Yep. Thank you. So, Mr. Jimmy, Mr. Ernest Asari Kansa, he's based in Georgia, but he can file states nationwide. He can file taxes. Sorry, you don't have to be a resident of Georgia for him to help you with your taxes.
No, I file everywhere. I mean,
Yeah,
everywhere you are, you know.
yeah, even international.
I mean, I have people, well, when it's international, I have to clarify. I have
Yes. So,
Americans outside US
there you go.
that have filed their taxes,
Yeah,
yes.
expert rates. Yeah,
You know,
who are go up. Yeah, he does
because
all
people have realized that, hey, if you're only on pension, maybe it cannot, sustain you here.
that.
So they move to other countries, and you still have to. Some of the pensions are still taxable, and they want to make sure,
Yeah,
they file their taxes.
yeah.
Some too have business, so they go up and down all the time. So we do all that. But one thing I do is that I walk you through the process. If you agree before we move ahead,
Yeah,
okay, walk through the process. I don't mind coaching you to go and do your stuff. That's fine.
yeah.
Because information is all we all need. That's all we need.
Yeah, which is very powerful. It's better to be informed and ahead of time before it's too late. Mr. Jimmy is asking, how would they know if the child is not with you?
Like I said, they will never know until something happens. Okay, maybe somebody else tried to claim the child. Then they will write to you to come. You see, one thing about IRS would never accuse you the first time. And as they always tell you, they won't call you, they won't text you, they will write you a letter that this is what we have seen. So accept it or come and prove this. Okay, so like I said, they don't have time looking for whose child is what child. The only time I have witnessed is when something happened and like two people are claiming the same child. Okay, now sometimes if you are for one person has claimed the child, is even the other one will not go through electronically. So for child A, if I've already claimed child A on my taxes and I filed and it went through, the other person trying to claim the same child A, electronic filing will not go through. It will tell you the dependent has already been claimed. But when it comes to people who do what they call it, paper filing, and you'll be surprised, people still mailing their taxes. People still mail their taxes. Now, sometimes too, what happens is that you have a business making losses. So now IRS wants you to come and support some of the expenses you put down. By that time, somebody will look into your taxes to see if you're dependent. So like I said, they won't just pick you and say, let's check if your dependent is your dependent. That will never happen. But because you put some expenses on your business side, now you are being audited. And they don't want to finish one, deal with you, come back. So before they come to you, they have verified everything. And unfortunately, if that is the case, then they will come and say, okay, come and prove ABC to support your children or your dependent. Okay. Now, you can claim your parents. Your parents don't have to live with you to claim them. Okay, yes.
So your parents can be out of the country? Is that what
I mean, so far as they have social security number, yes.
Okay, that's good to know. So, do you have any special advice for our retirees watching?
Well, the retirees receiving the social security, depending on how you retired, a portion of your social security is taxable. And if that's the case, and I've seen it and I'm advising my clients, let them go ahead and withhold some taxes. Once again, even if you're going to pay $500, retiree, if they want you to bring 500 bulk, that would be a pain than if they were taking it like $20, $25. So and I think you can retire before the early retirement. Yeah, the early retirement, some portion of your income is taxable, not all of it, which means and I'll tell retirees whether you pay taxes or not, go ahead and file it because you don't know. Sometimes the information you put in determines a whole lot of things. Some of these are, that's why sometimes I tell people that we can use your last pay stub to make estimates, but that will not be the final, because when we get a W-2, we enter everything on a W-2. There are some codes, especially those who get 1099s. The different code will determine whether you pay tax or you don't pay tax. So if you're in that situation, go ahead and file it. And like the person who's been paying every year, now let's look into it and see how best we can. Because once again, if you make the income, you can't run away from the taxes.
Yeah.
Our goal is to use what we can use to bring that income down, to reduce it for you.
Yep.
Okay, so it is tax reduction, not tax evasion.
Amen. It is tax deduction, not tax evasion.
Tax reduction.
Reduction.
We try to help you to reduce your taxes, but not to help you not to pay taxes.
That's a good one. Yeah. We have to put it in mind that we see the benefit of the taxes that we pay. We enjoy it, the parks, the roads, the schools. So please, let's not have it in the back of our mind that we do not want to pay the taxes. You see on the news what happens to those that evade paying taxes. They get jailed.
And let me add this. And for those who are purely self-employed, that you are not paying taxes. Okay? If you pay taxes, if you are self-employed and you have income, you report a profit. Please, there's a difference between your revenue and your profit. Okay? Maybe you are self-employed. You are using one of these, they call it merchant, whatever, that sends you 1099. Okay, so which means that income is reported to IRS. They will tell IRS you made 100,000. But in your taxes, that's where you go to put in your expenses. And that's where most people will do zero, put in, even make a loss. If you are purely self-employed and you are always reporting zero income, it means you're not paying taxes. And if you're not paying taxes, you are not contributing to Social Security and Medicare. So that's one thing, I think for the past 3 years after COVID, that's what I'm advising some of my clients. And one client is retiring in 2 years and they're going to get only $220 a month because they've been self-employed all this while, never reported any profits.
Wow.
Yes. So if you are purely self-employed, think about, unless of course you have the money you are saving somewhere and you don't want to depend on Social Security or Medicare, then that's fine. Okay. But if that is the case, then some minimum profits, you pay taxes. I know, and I know for someone who has not been paying taxes, this is going to be a pain in something.
Yes.
But it is what it is. You contribute, no contribution, no chop.
No chop.
You contribute towards your Social Security or you don't get it. So imagine retiring and receiving less than $300 a month in this Donald Trump America.
Hey,
what can he pay? So if you're self-employed, unless of course you have some special savings that you're going to depend on, then be very intentional. Show some profit and pay the tax. Now, what you can do, self-employed, you can, just like W-2, they take taxes every paycheck. You can also do what we call the estimated taxes. That every quarter. I have some clients that I make them do it monthly. Okay? Every month you send something to IRS. You just keep track. So by at the end of the year, you've paid them $1,500. If we show you a little profit and you have to pay, what do you call it? $500. It means you've overpaid. So you also get a refund. Because people who get refund, it's not free money. It is excess of what they have paid.
Yep.
Refund is simply, so nobody gives anybody money. Yes, your dependents can help you. Your dependents, especially the younger ones below 17, will help you. If your income is not that much, will give you that earned income credit, charters credit, additional charters credit, and all that. You get it. But as the kids are growing and the income is also going up, then it's time for you. Let me tell you, if you sit down and you do the math, you realize that nobody gave you anything. Because all the refund that you collected, so you pay them back in one way or the other. Unless, of course, you decide to remain where you are. But from the beginning, everyone is pushing to earn higher. So as you earn higher, you get to that equilibrium point where you are not getting anything back because the kids are also grown.
Mm.
Then now your income is going up, so you begin to pay taxes. But regardless of what it is, you still go home with majority of the money. So if you can make the money, please go make it. I will make 2 million, pay them 1 million, and keep my 1 million.
I'm with you.
I had a client. I'm like, okay, now you are making 60,000. Okay, what about if you have to make 1 million and pay them 400,000?
Mm.
And the client told me that's too much. I'm like, did you think about what I just said? You are making 60,000, and because of taxes, you are limiting yourself to go and make 1 million and
Mm.
go home with 600,000. I was like, oh, okay. So let's begin to think
Okay.
about taxes and understand how it works and what plan it well. Okay.
Thank you. Question for you. What we hear one of the tax strategies is to maximize your 401k plans, your Roth IRA plans.
Mhm.
Is that helpful in reducing our taxes?
Yes.
Okay.
Yes, because what happened is that you are pushing some of the taxable income into this retirement income. The only thing is that remember when you take that retirement income early, that's why they bring back all the penalties and all that. But if the goal is to keep them till you retire, then there is no penalty. You only pay interest on you pay taxes on the interest you earned. Okay, but if you push it in there and later go and withdraw it before retirement, it's 30%.
Yeah.
You pay back 30% in taxes and penalties.
Mhm.
Yeah. So yes, and it's true. Max it, and for younger fresh graduates, that's the time you can push even your first 2, 3, 4, 5 years. You can push 20% in there, because you see the funny thing is, if you don't start, you may think it will be tough. But if you get used to, okay, this is what comes in, and you plan with it, you are pushing 20% every paycheck.
Yep.
Within 5 years, when you look at your 401k, you'll be like, wow, that motivation will be there. And you are able to manage with that percentage. So, but if you don't do it at all, sometimes the money, if the money is there, you know that before the paycheck comes, Amazon is dropping at your door. Amazon. That's why Amazon is planning to make sure that their services are quick. You order today, you can get today, tomorrow, next day. Quick. Okay?
Yeah.
But if you really know that the money is not there, because it's not in your hand, sometimes the money in your savings, you easily have access to them.
Yes.
But if you push it there and you know it's going to be that penalty, it even discourages you from taking the money, which will help
Yes.
you in the future.
Yes.
Okay?
Thank you so much. We do have a few questions and we'll wrap up in a few. Mr. Jimmy is asking, can someone retire at age between 40 to 50 years?
No. I mean, legally, you can stop working, but I think the retirement age is what, 67?
67. The
And
ideal retirement.
early retirement is 62 for men. I don't know about the women.
Same.
Okay, so what it means is that you can stop working at the age of 30, but you can only begin to cash in because you've put in a lot.
Yep.
And one thing you have to remember is that the Social Security, to qualify, they call it by quarters, 40 quarters, which if you put it now, is about four times 10 years.
Yep.
Okay, so if you have worked for 10 years, 4 times 10 years, you qualify for Social Security. But you can't take it now until you qualify.
Yep.
Okay. And they used to mail statement, now they don't, but create an account with Social Security and log in.
Yes.
They will tell you when you can begin, even though you have not decided to claim. They will tell you when you can begin to claim your Social Security and how much you are going to get if you stop working today.
Yes.
How much you can get at this age, at this age, at this age. Yeah, but if you did a good job and after 40 you have a lot of investment, it's time for you to travel for the next 30 years and you don't want to work. That's fine. You've put in your hours, but you have to wait till the age to begin to withdraw from it.
Yes. Thank you, sir. Yes, you can retire at any age. Everyone's retirement age is different.
Yeah, but to draw from Social Security, you
It's,
have to meet the age requirement.
yeah. And if you withdraw early, it reduces your full amount.
Yes.
You deduct it. You
And I
get
think if you withdraw early, there's also a limit on how much you can make if you go back to work.
correct. If you go back to work, you can only work less than 20 hours. You can't work more than 20 hours. If not, they'll take the money back from you.
Mhm.
So there are a lot of guidelines around that. If it's something you're looking to doing, sit with Mr. Ernest, book a session with me as well.
Yeah.
I'm an analyst, a social security analyst as well, so I'm able to help you with that. So it's really everyone's story is different.
Everyone's
Everyone's
story is different.
is different.
Everyone's story is different.
Everyone's goals are different. Retirement, financial planning, um how much you collect on social security. Mr. Jimmy here, you're asking, it all depends on how many years you've worked and how much of income you worked during those years.
Correct. You know what? Like I said, if you haven't done it, go to the SA and create an account
Yes.
where you'll be able to see your annual statement.
Mm-hmm.
It will break it down that this year, this is how much you contributed this year. Based on that, if you should, even they tell you that if something should happen and you are disabled today,
Mm-hmm.
this is how much you're going to receive every month. They tell
Yeah.
you all that.
Yes.
Okay. Yeah. But the more you contribute, if your income is higher, because it's a percentage.
Yes.
So the more you contribute, the more your
Mhm.
payment will be.
Yeah.
People. I know people going home take like less than 1,000. People taking more than 3,000. So it all depends.
Yeah.
Some take 4,000 home because they were making all their money.
Yeah.
Yeah.
There are other ways around it too, which we can talk on a different session.
Okay.
Yeah, you can also claim depending on your spouse.
Mm-hmm.
You can claim based on your spouse's income, vice versa. Either married, divorced. There are a lot of loopholes around it, but try to reach out to us, either Mr. Ennis or myself, and we'll be able to help you with any questions that you have around your
Social Security.
social security, your tax planning, wealth planning as well. So, and please do all remember to subscribe if you're yet to subscribe to this channel. Like this video. The more likes, the more this video goes viral and gets to the people that need to watch it, which is people like you and I need to have this information in order for us to prepare for the year ahead. One last question here and we'll wrap up with this. Thank you all for all our viewers still on. Thank you so much. This came to me personally. I haven't filed my taxes in over 2 years. This individual was asking. Because I'm scared I owe a huge amount. I don't even know where to start. Well, they should book an appointment with you.
I mean, that's what it is. Because we have to look at the scenarios. He said, you haven't filed tax. Are you self-employed? Are you W-2? So it all depends, I mean, if you are self-employed, maybe for that 2 years, we can say we don't want to pay tax. So we can help you. Okay. The only thing I encourage self-employed to pay taxes is all about the retirement thing I'm talking about. Because if you report zero income, and if you're self-employed, there's a whole lot of deductions you can, Now, and let me use this to clarify this deduction things that people make noise on the internet. It's like, oh, you can deduct that. You can deduct that. Somebody came to me, I lost about 40,000, expecting the government to pay them back the 40,000. I'm like, no. It doesn't work like that. It's a deduction. A deduction is an amount that you can subtract from your taxable income.
Yes.
Okay. So if you let's say you have both W-2 and self-employed, you made 100,000 on your W-2. Then you invested in some business and you lost 40,000. It doesn't mean the government is going to pay you the 40,000. However, you can, instead of paying taxes on the 100,000, you can deduct the 40,000 from the 100,000 and now pay taxes on 60,000. Nobody gives you money back.
Yep.
So somebody went and bought a car and want money back. Like, it doesn't work like that. Okay. Yeah.
It doesn't.
And the other one is very technical for self-employed. I had a client that's as dependent. Okay. And this client wants to claim everything, which means profit is going to be zero. You have dependents with zero income. You are not getting the credit. Okay, so yes, legally I spent 10,000 on business expenses. I can choose not to report it, so that I'll have a 10,000 income to help me collect the charter's credit, earn income credit, and all that. But these are things like, when you bring your taxes, we can sit you down. I've worked Liberty Tax, I work with their HR block, and what they charge you for is what we do. Okay, over there when you go, they put in as you brought it.
Mm-hmm.
I enter all your expenses and I say, okay, you owe.
Mm-hmm.
But if you come to me, I'll tell you that because you have dependent, you don't have to show zero income. Two things: show profit and get the refund, and let the profit also contribute towards your social security and Medicare.
Amen to that.
Okay, so don't be too much for those who have dependents.
Mm-hmm.
And maybe some of you have dependents and you are not making what do you call it? Because if you don't have the income, you don't get the earned income credit.
Mm-mm.
Okay, and if you don't have that, all those credits, you don't get it.
Yep.
Zero income, zero for everything.
Yep.
Okay, so let me
Yep.
chip that in.
And I want to add to that, it's very and highly recommended that you do show income, especially if you're a business owner, for good business planning. Because think about it. If you
No
keep,
bank will give you loan
thank you. If you
for a
keep
business that has been making losses for the past 3 years.
no bank.
No,
And if you're looking for grants, that's not a conversation starter to get a
that's why
grant.
they will tell you your business is a hobby.
Yes. So please, something has to give. We're all about tax reduction, not tax evasion.
Correct.
Tax reduction, not tax evasion. Use the right strategy. Don't be too greedy. Don't. Because if you don't do the right thing now, a year from now, 2 years from now, it's going to affect you, your business, your family, your planning, your retirement goals, your business goals. For remember the business loans that were available during the COVID, the SBA loans. Some people
Yep.
could not qualify because they didn't have their businesses registered and they had not filed taxes. So please, 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 let's make sure that we're not avoiding filing our taxes. Let's do the right thing so that when we need those statements to work for us, we can use it. We can file for that business loan. We can apply for it. We can apply for that business grant. We can present our financial statements as a registered entity the right way. Mr. Ernest, I'm going to close up with this question, please.
Maybe before that, let me add some bonus.
Okay, go
When
ahead.
it comes to registering your business,
Mm-hmm.
the type of business you register is very, very important.
Yes.
Okay, it's very, very important. You have the option, regardless of what it is, make sure your self-employed business is LLC.
Mm-hmm.
Okay, LLC means limited liability. What that means is that if something should go wrong and the people sue you, they sue the business, you are covered. Your personal assets will not be affected. If your business is sole proprietorship, so there's no LLC attached to it, then when they see you, they are seeing you, the person. So your personal assets, will be affected. So make sure your business is an LLC. And if your business is an LLC, when you are dealing with people, when you write, include it.
Yes.
Okay. If your business is ABC Company LLC, and you always call yourself ABC Company, and something happens and this client takes you to court, and you say you're LLC, and this client can prove that with all their communication, you never mention LLC, the court will treat you as a sole proprietor, and your
Amen.
personal asset will be affected.
Yep.
Okay, so that's number one. Now, for businesses that are doing very well, okay, it's an LLC. You want to pay yourself. Okay, by law, a single member LLC cannot pay yourself a W-2 because the profit of the business belongs to you. So that is your income. So one way that you can pay yourself and contribute meaningfully to Social Security and all that is to opt to be taxed as an S corp. You are an LLC, but you can choose to be taxed as an S corp. Then that business can pay you W-2. They can run a payroll for you so that you can deduct federal income taxes, state income taxes, so that you are self-employed, but you are meeting all these requirements. Then, of course, if you register a business as a corporation, that's separate. The business files its taxes separate from you. So if you are filing taxes as an S corp, a partnership, or a corporation, the deadline is March 15th. I'm stressing because the penalties are huge.
Amen.
If you have LLC that nobody gave you a 1099, even if you don't file, IRS does not know. So it's not a problem. Okay. But if you are an S corp, a partnership, or a corporation, even if there's no income, you have to file. Okay. You can ask your question.
So thank you so much. Great nuggets on today's conversation. I think we're gonna do a part 2, but we'll see how the
You
year
know my
goes.
schedule, right?
Yes, 2026. We know your schedule, but we'll make time. We've been trying to get this on the books for the whole year, but we finally made it here. So thank you so much. So to our viewers out there, can you give or explain, when they're sitting down with their tax accountants, what are the questions that they should make sure they ask? Because during the tax season, you guys are busy. You guys are busy. You are, you're trying to get things done, onto the right next person. It's a time of pressure, time. You guys are busy. Simple.
Well, I mean, yeah, we are busy, but to me, that's the time you have to apply what you know.
True.
Okay. I have clients who come to me and, I would rather ask some questions to get some answers.
So, how about clients, for people who already have a tax accountant that they're using?
Okay.
How should they start this conversation? What are the key questions that they need to ask when they go for their tax filing? And if they cannot answer those questions, then they need to come book you.
Well, I mean, I'm not taking anyone's business. You see, personally, I mean, people come to me because they were referred, and I like it that way.
True.
But sometimes you trust other sources.
Yes.
But one of the things you can ask your tax preparer is, like this session, especially even if when you are getting a refund, you can ask, how can I make this better?
Yes.
What are other things that I can qualify for, that I can do to qualify for ABC? Okay. And also understand your tax return. I've seen a whole lot of clients that, when they come to me for the first time, I ask them questions on their tax return. Is like, I don't know. Please let your tax preparer walk you through.
Amen.
Your tax return. That, okay, this is the income you made. Because of your family size, this is your tax bracket. This is the tax you're supposed to pay. And this is the tax you paid. That's why the difference is you paying back or you getting a refund. Because people just hear the refund, number one, they will even ask for a copy of their tax return.
Amen. That one.
And most people are tax preparers for the season. After tax season, they've even traveled. You can't get them. And sometimes people complain that when you call them, listen, if the person is just a seasonal tax preparer, you don't get them after tax return.
Yep.
I mean, after tax season. Okay. So the day your taxes are finished, get a copy. And I'm sorry to do this, but I've had an experience. Get a copy of your tax return. Find a way to get a transcript from IRS and compare to see if what you have in your hand is what is with IRS. I've seen something before. I can't go into details, so that at least you know that you are clean with IRS.
Amen.
Another thing I would say is that it's very, very, very easy to create an account with IRS. Go to irs.gov, create an account, and you don't need them for anything. When you call IRS, what they tell you is what they see on your report. That if you have access to your account, your transcripts are there, your letters are there, anything about you that when you call, they will tell you is there. Because sometimes when you call IRS, it's a pain. And please, IRS is 7 millions. It's 7 million. So when you call them, and not that is how they are. Me personally, anytime I call IRS, I go through because I'll call them 5:07 a.m. I know they open at 7. Okay, so from 7 a.m., I'm calling them. I'm calling them the time that I'm either doing something, so my phone is on speaker whilst I'm working, and I'll get them. Okay, so please, just ask your tax preparer, what do I need for the next season? Unfortunately, once again, not every tax preparer is an accountant.
Yes.
You can just go and train and know how to do it, but you see a difference between an accountant preparing your taxes and a tax preparer,
Yep.
So,
Yep. Well said. Thank you very much. Thank you very much, Mr. Ernest.
but I'm free to give, I can give free counseling, so I don't mind.
Yeah.
Just get my information. Somebody's calling from New Jersey. I'll call back.
They're already calling for questions. All right. Thank you, viewers. Thank you so much. We're past the hour, but I believe this has been insightful. This has been great. So let's give Mr. Ernest a round of applause. Like this video, thumbs up. If you get to subscribe, do what to subscribe. His information is on the screen displaying his contact information 678-665-0686. His email address shiningstarfinancial@gmail.com. He's a tax expert. He's a professor in accounting. He's an accountant. Well practiced, well experienced, many years of experience. You can't go wrong there. I refer him to my clients, and they never come back with with any on this on any bad news. And I thank you, Mr. Ernest, for your honesty, for your your transparency when dealing with your clients. That's what we need. We need to hear the truth. you know Thank you so much. Let's appreciate him greatly on the chat. You can say thank you. Awesome. Thank you. You see the love, they're showing the love. Yes, thank you so much. Thank you so much to each and every one of you. We appreciate you. We appreciate you. And share this video. Let's prepare one another for the new tax year 2026. Tonight, we covered understanding the tax process. He explained it from a self-employed view, from a W-2 views, from retirees, from business owners. He explained it all across the board. We touched every aspect. Real strategies were shared that you can apply before the tax season hits. Be ready. Start booking your sessions with your tax accountants. If you don't have one yet, here's one you can use. Schedule. If it's for advice, for you to just schedule a call for advice, to get some advice, that's also fine. Reach out to him. He
And
will.
quickly, I'm sorry to cut you short, but I do business registration, EIN, and all that. I do that. So, and
Beautiful.
when you come, that's where I'll ask you questions to see the best type of business for you.
Awesome. He's well versatile when it comes to business. So reach out to him. Please do well to connect. Now, before you go, like I said earlier, give this video a thumbs up, hit subscribe and share this live with someone who needs this information. And if you want a personalized plan to improve your taxes, to grow your money, or understand what the tax changes are in terms of your money, your finances, your personal finance, please do well. We're still offering our free wealth discovery call with me. The link is in the description section of this video as well. I've also added Mr. Ernest's contact information. Our guest speaker is also in the description as well, so you can reach out to him and myself, book your sessions. Let's start the new year on great grounds, on fertile grounds, with our strategy going forward, building our wealth, paying our taxes, but reduced taxes. We're not avoiding taxes. Reduced taxes is what we're trying to build here. Thank you all for joining our Build, Grow, Thrive Roundtable tonight. If you're watching the replay, thank you so much. Share, subscribe if you're yet to subscribe. Let's go into 2026 ready, prepared, and empowered. Thank you so much, Mr. Ernest. Do you have any final words to say to our guests? To our viewers out there?
It's the same concept. Go out there and make money and forget about taxes.
Amen. Go make money. Go make that money.
Yep.
Forget about taxes. Uncle Sam will be all right. We'll pay them.
Take care of yourself. Yes.
Amen. Good night, everyone. God bless you.
Okay, then. Bye-bye.
Bye.